In this video, traders, we're going to look at why you might not really want a stock to go to zero if you're short. Here's an odd anomaly that occasionally happens that's pretty devastating for short sellers. Stay tuned. Hey guys, warm welcome to, alright, so this happens occasionally from time to time. I don't know if someone personally this has happened to, but I have heard stories about it and I've read articles about it and it's pretty horrendous. So let's just think of a scenario. You are shorting a stock, you're kind of more of a longer term trader. You recognize the stock might well be a little bit overinflated. It's a bit of a nonsense company. They've got nothing there. The balance sheet's naff. It's been pumped up on hype. And so you're shorting. It's actually quite a good strategy, that one that I kind of do from time to time when I find the right sort of thing. And this kind of made me think, oh, we've got to be careful of this sometimes. So let's say a company's been chugging along, gets pumped up for whatever reason, nothing really has happened, and the opportunity is on the short and on the back end. It's not shorting on the front end because you get your face ripped off, because that's a kind of 2, 3, 4, 500% move in some cases. This is small cap stocks, by the way, guys. It's not big stocks, generally speaking. Smaller caps, thinner stocks, illiquid. Sometimes these Chinese ADRs, but it could be anything that's pretty much a naff company. And then you're shorting on the back end and looking for it to kind of go back to where it was, and there's a nice gain from that trade. Now, a couple of problems with this. Number one is borrowing the stock. We've talked about short selling before. You have to go out and borrow the stock, and if there's no stock available, you can't take this nice high probability trade. And that's really the biggest barrier to entry. That's the thing that stops me quite a lot, is finding the stock to borrow. Often there's a very great trade there, but if you can't borrow the stock to short, absolutely useless. So there's that. The other thing is the high fees associated with short selling. Now, if you can borrow the stock, if it's in high demand, then you can be charged up to kind of 30, 40, 50, I've seen 100% a year just to borrow that stock to sell it short. So you've got to be pretty quick for it to be worthwhile for you. And just to go over what that means, when you're shorting something, you're going out and you're borrowing a stock and saying, hey, person who's got the stock, and that could be kind of someone who's a big investor, could be a hedge fund, could be a mutual fund, could be anybody. Can I borrow that stock? I want to sell it short. Yeah, sure you can, no problem. But I'm going to loan it out to you at 50% per year. What? Well, if you really want to go short on it, that's what it's going to cost you. So you agree to the terms, you take the stock, you sell it into the market, you get cash in return. So now you've got cash sitting on cash, you've got stock in the market, but you still owe that guy or girl the stock, and you're accruing kind of charges every day. Hopefully the stock will go lower, you can buy that stock back. So let's say you sell it for 10, you buy it back for 1, you make $9 difference. So you buy it back with a little bit of cash, you keep the cash, you pay him, and you make money, he makes money, and that's how it should work. If there is a very high kind of interest in this, there won't be any shares to short, and they'll say no, there's no shares to short, or it'll be really high, like I say. But the point of this video, guys, is that this is one other extra thing that can happen to you as a short seller. So you've got this nice trade on, you've been short, all of a sudden it goes down and it goes to zero. Great, you think that's the maximum you can make on your short position. Well, it may well go to zero, but let's say before it actually goes to zero, it goes to $2, and then at that point, it gets delisted. Right? And imagine this scenario where you've just shorted, let's say you've shorted a modest kind of $100,000 position, and let's say you've got a not so modest 40% kind of value to short, loan to short. So what they'll do is that's a 40% per annum. Now that seems really high, and it is really high, and this is not uncommon at all. Stuff like Apple, stuff like the run-of-the-day Nasdaq stocks, a very small amount. You're talking 1%, 0.0%, tenths of a percent, so very low. Some of the high stuff like this that's likely to kind of go bust, if you like, is very high. So you look at how much is that costing you? That's costing you $40,000, dollars, sorry, per year to short. And what they do is they divide that by 360, not 365, 360. That's what's that, 111. So call it $111 per day you've got to pay to hold that short position. So imagine if you've held this all the way down now, and it's taken, let's say it's taken a month or so, or a tenth of that. Let's make it easy for ourselves. Take a 10, it's a tenth of that year, 36 days, or just over a month. and it's cost you $4,000. That's okay, because obviously you've now made a significant amount of money. That's become worthless. So really, you've kind of made 96,000. You've got 4,000 spent. But it's where the problem can come in. If it gets delisted, you've got this real anomaly now, where if it gets delisted, it's still marked to market at the last trading price. So let's say it's $2, right? You're borrowing those shares. You're borrowing $100,000 worth of shares. You're paying now still £111 per day to keep this short. There are scenarios where it stayed delisted and not trading, but still costing you short interest payments for months. And there have been unusual scenarios where the SEC haven't kind of sorted this out, so to speak. The broker is still charging you because they're still getting paid from whoever, or they're still getting a bill from whoever they've borrowed the stock from. They're still billing you £110 a day. And you can see that if this goes on for, you know, a decent amount of time, you've lost all your profit, if not more. I mean, you could. There was a scenario where I read where some chap had a very, very high kind of short loan fee, and he'd lost all of the profit on his short and was now in debt. It was just plodding on. He was adding more and more kind of debt to the bill, and he couldn't do anything to get this kind of mark to market at zero. When really it's delisted, it's got no value, it should be zero. It's either delist it and set it the price at zero, or put it back in, relist it and let it trade again, so that the guy can actually cover his shares, because he couldn't cover the shares because it's delisted, so he's got no one to transact with, and he's getting billed per day. So this is an unusual one, and probably not in the scheme realm for most of us, but I think it's nice and interesting. And this, I still quite like this, so I've got to watch out for this from time to time if you get on the lucky side of it. But then again, unlucky it's delisted, you need to kind of know what to do with that. Maybe that's a discussion to have with the broker before. I guess some brokers have this sorted, some don't. Maybe it's a kind of clerical issue. I don't know, but the point is, you got to watch out for that, guys. You don't always want it to go to zero or get delisted when you're short. I think the moral of this is, and easier said than done, when you get the meat of the trade, especially in this kind of thing, you get 80% of the move, then take it out, move on to the next one. It's not really worth holding for that last chunk, because obviously percentage-wise as well, you know, to go from $2 to $1, it's quite a haircut, quite a 50% haircut, but from your initial entry, it becomes less and less valuable. And that's the other thing with shorts. When you're shorting these kind of things, as they start to go more in your direction, it becomes, you know, less of incentive to hold it, because the moves become smaller and smaller percentage-wise. All right, guys, that's an interesting one. Why you might not want your stock to go to zero if you're short. Take care. Bye-bye.